The marginal costing concept can also be applied to making make or buy decision. Okay. Under make or buy decision, management may be contemplating on whether a particular raw material, sub-assembly, or the component required for the manufacturing of the company's final product should be produced internally or contracted to an outside supplier. A decision needs to be made whether to outsource the production of the components and or it should be produced internally by the company itself. This kind of a decision is very critical and strategic because of the need to protect the degree of secrecy or the proprietary information underlying the company's product, especially in a business environment where competition is highly stiff. Okay, because if the company decides to contract the production of the component to an outside supplier, how are we sure that the supplier will not leak the secrets underlying the company's product to the competitor? So a company needs to be very careful before the final decision is made. Therefore, when it has to do with make or buy decision, this kind of decision will be analyzed in two perspectives. One is the quantitative perspective, then the other part is the qualitative perspectives. Under the quantitative perspectives, it represents the process of comparing the supplier's quotation with the relevant cost of making the component in-house, whether it will result in a saving or deficit to the organization. Okay, you can use the formats below whenever you want to carry out the economic analysis of the decision to make or buy the component. Okay, so you can use this format. Okay, so you can say saving or deficits from making the components. Okay. Now, when you want to carry out the economic analysis, the most important thing you need to do is to compare the supplier's quotation with the relevant cost of making. So you go into the question, what is the price that the outside supplier wants to charge the company? So put it there. So here will be supplier's quotation. Okay. Depending on how you want to do it, it is possible you may want to put your figures at par value. You may want to use par value, or you want to use absolute value. Whichever one you use, you are going to get to the right answer. All right. So the par value will be faster. However, where you have other elements that make up your relevant costs that are in absolute value, so it's better you just make everything to be absolute value. So go into the question, pick the supplier's quotation, then you post, you close. That's number A. Then you compare this with the relevant cost of making the component. So you go into the question, any relevant cost you have there, put it under this heading. So you can have direct material. Okay, post. You may be given direct labor. You post. You can also have direct expenses. you post. It is also possible you may be given variable production overhead. Okay, you post. Any other relevant costs like opportunity cost, okay, you post it. You may have direct slash incremental slash specific slash attributable fixed costs. Okay, attributable fixed costs, you post. Any other fixed costs that you may be given that are relevant, just add everything together. So this will give you the total relevant cost. This is total relevant cost. Here is B. So at this point, you need to make a decision. So that will take us to the decision rule. Decision rule. So under make or buy, what are the decision rule? Number one, if supplier's quotation in this format, supplier's quotation is A, relevant cost of making the component is B. Therefore, if A is greater than B, that is, if supplier's quotation is greater than the relevant cost of making the component, your decision should be that the component should be made. So if A is greater than B, make. Okay. Then number two, if supplier's quotation is less than relevant cost of making the component, you buy. Then number three, if supplier's quotation is equal to relevant cost of making, so the company can either make or buy depending on other qualitative factors. Either make or buy depending on other qualitative. Okay, let me write that. Qualitative factors. So if supplier's quotation equal to relevant cost of making the component in-house, the company may be indifferent as to whether to make the component in-house or to purchase from external supplier. All right. So in this case, what are the qualitative factors associated with make or buy? So qualitative factors. The following underlying qualitative factors should be considered when making a decision on make or buy. Now, when you want to state your qualitative factors, remember we said that qualitative factors are those factors that cannot be expressed in monetary terms. Any factor that is not quantifiable or that is non-monetary are what is known as qualitative factors. All right. So what are those factors you need to take into consideration under make or buy? When you want to do this, you need to analyze it in two different ways. You are going to look at the perspective of the company. What are the factors you need to consider if you want to produce the component internally? What are the factors you need to consider? If you want to contract it to an outside supplier, what are the factors you need to consider? So let's take it one after the other. Say, for example, you want to manufacture the component in-house. What are those factors you need to take into consideration? Number one factor is you need to consider that there are some vital questions that will be begging for answers. For example, you can ask, are we permitted by law to produce the components? Okay, because not all products are permitted by the law of the are permitted to be produced by the law of the land. So you need to ask yourself this germane question, whether you are permitted by law to produce the components internally. Okay, you ask, are we permitted by law to produce the components in-house in addition to the company's final product? This is a question that you need to ask yourself. Like, for example, there are some states in Nigeria, especially in the north, where you cannot conduct some kind of business, okay, some kind of businesses. So you must ensure that the law of the land permits you have the capacity, or you have the license to operate in the land. Then number two, before you go into production, you must ensure that you have the technical know-how or expertise to produce the components. Therefore, you need to ask yourself, do we have the requisites technical know-how or expertise to produce the component internally? That's another question you need to ask yourself. Then you provide answer to it. Because if you don't have the requisite expertise, so what's the point? It's better you contract it to an outside supplier. Number three, you also need to, even though you may have the expertise, you can't do it all. When you say expert is not common. It's not something that is common. Only few people will have the technical know-how. But when you want to produce, you are going to need labor. Okay, you are going to need manpower. Therefore, do we have sufficient manpower to produce the component internally? So you need to ask yourself that question. Do we have the required manpower to produce the component in-house? Okay, so you need to ask that, because if you don't have it, then what do? Do we need to employ people, or we engage people that will do the work? So you must ask yourself this. Or if you don't have it, then you need to determine, you need to estimate how many hours of people do we require to produce on a daily basis and all of that. So what are the numbers of employee or number of workers that will be needed? What are the hours required? So all of this will need to be determined. You can't just go into production because you have so much resources. Then you go into production. When you now get there, you now realize that, oh, you don't have the expertise to produce. No, there's no people that will do the work. That is, we can't be doing that. All right, there must be proper planning. Then number four, you also need to ask, or another factor to consider is that the need to protect the degree of secrecy underlying the company's products. Okay, the need to protect the degree of secrecy or proprietary technology or proprietary technology underlying the company's products. So as a company, because you want to protect the degree of secrecy underlying your product. Every product is unique. All right, there are mix of chemical that make up the products being produced. Therefore, as a company, you have responsibility to protect the degree of secrecy underlying your product. That proprietary information, the proprietary information that underline that is embedded in your products, you need to protect it, because if you decided to contract it to an outside supplier, that means you want to give out that proprietary information. And how are you sure that the supplier is going to protect, is going to guide jealously the degree of secrecy underlying your product? So if you take this particular factor very seriously, then the company may decide to just produce it internally. Then number 5, another factor that the company may need to consider is the need to ensure better quality control of the product. Okay, the need to ensure better quality control of the products. Say for example, the company is already producing, all right, it's already producing the component. How are you sure that the external supplier is going to maintain the existing quality of the product? So to ensure better quality control of the product, then the company may decide to just produce the component internally. But if you can guarantee, if the suppliers can guarantee, if the external supplier can guarantee that they are going to maintain or even improve on the existing quality of the product, then it can be outsourced. Now, let's stop it at this number 5 for internal production. If the company wants to manufacture the component internally, these are some of the factors to be considered. Let's look about the other side. If the company wants to contract it to an outside supplier, what are the factors to be taken into consideration? Okay, so I will then come in number 6. What are those factors you need to consider if you want to contract it out? Number 1, or let's say number 6, do we have a reliable supplier who can deliver according to specification? So let's include that. Do we have a reliable supplier? Let me write that. A reliable supplier who can deliver, okay, who can deliver according to specification. Okay, so what this simply means is that you need a reliable supplier such that the way you want your product to be, or the way you want your product, your component to look like, your design, okay, the design of your product, you need a supplier that can deliver according to that specification. All right, possibly is an existing component or an existing product that you now want to, okay, let's contract to an outside supplier. So in this case, you must ensure that you have a reliable supplier who can deliver based on your own design, the way you want it to be, your specification. All right. If the outside supplier cannot meet up with the specification, then you may decide to produce internally. Then number 7, another factor for outside supplier is, can the reliable supplier satisfy our existing capacity level? Okay, so it's another question to be asked. Can the reliable supplier satisfy the existing capacity level? Okay, that's another question to be asked. Even though you have a reliable supplier, if you need 100,000 kilograms of the component, you should be able to get it. Not that when you request for 100,000 kilograms, the supplier is telling you that, oh, we are bringing 16,000 kilograms now. The balance we are going to bring the balance later on. Okay, this may disrupt the activity of the business. So you must ensure that you have a reliable supplier who can satisfy the existing capacity level. You can add one more. Okay, let's add one more. Can the reliable supplier offer a long-term arrangement? Okay. Can the reliable supplier offer a long-term arrangement? Okay, what this simply means is that this is not just a one-off thing, all right? On a regular basis, 2 years, 3 years, 5 years, 10 years down the line, so the supplier will still be there. Not so, because the company the company does not want to be changing supplier every now and then, because once you maintain that mutual relationship, you want to ensure that it keeps going for the foreseeable future. All right, so the company must ensure that there's a reliable supplier who can offer a long-term arrangement, okay, in supplying the component. So these are some of the factors that you need to take into consideration as far as make or buy decision is concerned. All right, so at this point, let's have illustrations. We have covered most of the concepts, so let's have illustration. Okay. Let's solve this question. Illustration 1. Hope Nigeria PLC is considering whether to manufacture or purchase a particular component KP6. This will be in batches of 40,000 and the buy-in price will be 26 naira per unit. Buy-in price represents the supplier's quotation and we are told it's 26 naira per unit. Okay, the marginal cost of manufacturing component KP6 is 19 naira per unit. Marginal cost is the same thing as variable cost or direct cost. And the component would have to be made on a machine which is currently working at full capacity. If the component was manufactured, it is estimated that sales of 4,000 units of finished goods it is estimated that sales of 4,000 unit finished products of ends, which has a marginal cost of 240 naira per unit and sells for 320 naira per unit, will be lost. Required, determine whether the firm should manufacture or purchase component KP6. From the requirement, it is very glaring, very clear what you are expected to do. So examiner wants you to advise whether component KP6 should be manufactured internally or purchased from an outside supplier. Under this circumstance, what are you supposed to do? Very simple. Just go ahead, compare the supplier's quotation versus relevant cost of making component KP6. That's what you need to do. So to solve this question, I would then say, okay, to solve the question, the name of the company is Hope Nigeria Limited. Okay, Hope Nigeria Limited. That's the name of the company. Then I will then say savings or deficits. Saving or deficits. Remember, we have a format from making component KP6. Okay, that's the heading. You want to determine whether component KP6 should be made or purchased. So, like I said, you need to compare supplier's quotation with the relevant cost of making. So I would then come here, supplier's quotation. I'll go into the question. What is supplier's quotation? According to the question, we are given supplier's quotation of 26 naira per unit, and you want to produce and you want to buy 40 batches of component KP6. So 40,000 multiplied by 26 naira. Okay. So 40,000 multiplied by 26. Bring out your calculator. So 26 multiplied by 40,000. This produces 1,040,000. Here is 1,040,000. That is supplier's quotation. Then you now compare this with the relevant cost of making the components. Okay. So then go into the question. What's the relevant cost? Examiner has given to us marginal cost. Like I said, marginal cost is the same thing as variable cost. So you are told in a question that the marginal cost of manufacturing component KP6 is 19 naira per unit. And the component would have to be made on a machine which is currently working at full capacity. So marginal cost is 19 naira. So you need to multiply 19 naira by the 40,000 components. Okay, so marginal, don't go and change the name to variable cost. Examiner has called it marginal cost. So use whatever the examiner has used. So this is 40,000 batches multiplied by 19 naira. So what do we have here? So I would then say 19 multiplied by 40,000. That's 760,000. Here is 760,000. Again, there's an additional cost that will be incurred as far as the question is concerned. Examiner told you further that in the last paragraph, we are told that if the components was manufactured, it is estimated that sales of 4,000 units finished product of ends, which has a marginal cost of 240 naira per unit and sets for 320 naira per unit will be lost. So what this simply means is that, of course, you are given a marginal cost of 240, you are given a selling price of 320, and you know that the difference between selling price and the marginal cost will represent a contribution. So you are told that if the components is manufactured, the company will lose sales of 4,000 units of finished goods of ends. So in this case, that would be contribution loss or opportunity cost. All right, that would be contribution loss or opportunity cost. Therefore, how do you determine the contribution loss? You less 240 from 320, that's 80 naira per unit. Then you multiply with the unit of 4,000. So whatever you have will represent the contribution loss. Okay. So I would then come here, contribution loss. So we are told is 4,000 units multiplied by, open a bracket, 320 minus 240. The 320 is the selling price, 240 is the marginal cost or variable cost per unit. The difference is contribution per unit, which is 80 naira. So you multiply the 80 naira by the 4,000 units. So that will give you the contribution that will be lost if the component is manufactured internally. So 80 multiplied by 4,000. That's 320,000 naira. So here is 320,000 naira. So add the two together, this 1,080,000. So this represents the total relevant cost of making component KP6 internally. So here, this is A, this is B. So examiner is asking you whether the company should manufacture the component internally or purchase from outside supplier. You notice that supplier's quotation of 1,040,000 naira is less than the relevant cost of making. Therefore, the company should purchase the components. Okay, so decision. So I will say, since suppliers quotation of 1,040,000 naira is lower than the total relevant cost of making components KP6 of 1,080,000. The components should be purchased. Okay, the components should be purchased. That's it. That's all you need to do. No need for too much of stories. All right. So that's the end of the question. Again, for you to be able to earn your full mark, whether you are asked or not, it's expected that you are going to state your assumptions. Sorry, you are going to state all your qualitative factors. You need to indicate all your qualitative factors. All the qualitative, some of this, it's not compulsory that you have to list everything. And then again, like I mentioned to you when we had the deleting of a segment. So it is important whenever you want to state your assumption in a question, you need to relate it with the question. You link it with the question. Don't just make it open. Don't make it generic. Link it with the question. So you can pick any of 5 of these, whatever you have, and link it with the question. For example, since you have decided to contract the manufacturing of the component KP6 to an outside supplier, therefore, so you need to ask, does our company, you can ask that question, does our company have a reliable supplier who can deliver according to specification? Okay, so when you say our company, so you're also internalizing it. Do we have, or can the reliable supplier satisfy the existing capacity level of 40,000 components? Okay, that's another factor. Can the supplier offer a long-term arrangement? Okay, can the supplier offer a long-term arrangement? So that's another factor you need to take into consideration. So you can add 2 more from the internal, all right? Especially the need to ensure better quality of the better quality control of component KP6. Okay, so all of these factors you don't need to be, even though in the question the examiner did not ask you to state all the qualitative factors. So it is expected that we are going to do all of that. We are going to do that. Okay, that is it. That is it. So that's end of the question. So you can just go to this ebook and read and go and practice illustration number 2. No matter how big is the question, the principle and the concept remain the same. If you like, let the examiner give you 2 pages, 3 pages. It's the same concept. Just compare supplier's quotation with the relevant cost of making the component, whether it will result into saving or deficit to the organization. So you can practice this illustration number 2 from this material. Okay. You can also practice illustration number 3. All right. That illustration number 3 is a bit technical. All right. Whereby you need to discount. Okay. You need to discount. The expected future cash flows to the present value equivalent before you determine the savings or deficit from making the part 2011. Okay, let me just show you from this material how it is being solved. Let me show you from this material. Let's go through this illustration number 3. Okay. Now, Skeletal Limited currently makes as many units of part 2011 as it needs. The company has recently received a bid from another company, Podolsky Limited, for making part 2011. The company will supply 1,000 units of part 2011 per year at 100 naira a unit. The company can begin the supply and continue for 5 years, after which time Skeletal Limited will not need the parts. Podolsky Limited can accommodate any change in Skeletal Limited's demand for the part and will supply it for 100 naira regardless of the quantity. Abubakar Haudu, the cost accountant, report the following cost for manufacturing 1,000 units of part 2011. Okay, so it's assumed that all these figures are correct. The following additional information is available. Part 2011 is made on a machine used exclusively for the production of Part 2011. The machine was acquired on 1st January last year at a cost of 120,000 naira. Okay, the machine has a useful life of 6 years and 0 terminal disposal price. Depreciation is calculated on a straight line method. 2. The machine could be sold today for 30,000 naira. Okay. Product and process engineering costs are incurred to ensure that the production process for Part 2011 works smoothly, although these costs are fixed in the short run. With respect to units of Part 2011 produced, they can be saved in the long run if Part 2011 is no longer produced. If Part 2011 is outsourced, product and process engineering cost of 8,000 naira will be incurred for the next year only. 4. Rent cost of 8,000 naira are apportioned to products on the basis of floor space used for manufacturing the product. If Part 2011 is discontinued, the space currently used to manufacture it could become available. The company then used the space for storage purposes and save. The company could then use the space for storage purposes and save 2,000 naira currently paid to outside storage. 5. General overheads are apportioned to each department on the basis of direct production labor cost. This cost will not change in total, but no general overhead will be apportioned to Part 2011 if the part is outsourced. Assume the required rate of return of 12%. Required. A. Should Skeletal Limited outsource Part 2011? B. What maximum price should Podolsky Limited quote on the 1,000 units to make Skeletal Limited indifferent between outsourcing and internal production? C. What non-financial factors would favor internal production rather than outsourcing? This is the question. This is a past question. What are you supposed to do? In the A part, you are to advise whether the company should outsource Part 2011. Okay, this question relates to make or buy. So what are you supposed to do generally? As you can see, ordinarily what you are supposed to do is to compare the supplier's quotation with the relevant cost of making Part 2011. However, you are not going to do that directly as far as this question is concerned. Why? Because examiner has given you a cost of capital of 12%. Whenever you have a cost of capital in a question, it means that you are expected to discount the future cash flow to the present value equivalent before calculating the determining whether you should want to make or buy Part 2011. Okay, so because of this cost of capital, then you need to discount first. You calculate present value for internal production. You also calculate present value for outsourcing Part 2011. Then you now compare the difference between the two, whether it is a saving or deficit. That's basically what you need to do. When this question was tested, majority of the students could not attempt it because they don't know how to treat the cost of capital. In fact, it was outside this. They did not expect it. They didn't expect it that they are going to have a cost of capital. They don't know what to do with the cost of capital. Some of them decided to ignore the question. Even those that attempted the question scored below average. That was the examiner's report. The question was tested, I think it was May or November 2021. Okay, yes, November 2021. So that's the question there. Okay, so let's quickly run through how this question was solved in this material. All right. The question relates to make or buy. However, since cost of capital of 12% is given, this means the future cash flow should be discounted to its present value equivalent. Therefore, the difference between the present value of external supplier, that is outsourcing, and the internal production cost will represent a saving or deficit from making part 2011. Hence, to solve the question, let's bring out the variables. So in this case, you need to first of all bring out the variables under internal production. You also bring out the variables for outsourcing. Option 1 is that you want to outsource it. Option 2 is that you want to make it internally. Then what are the cash flows that you need if you want to outsource part 2011? What are the cash flow that is needed if you want to produce part 2011 internally? All right. There are some assumptions that need to be made in this particular question, because in the machinery, the machine that was talked about in the additional information number 1, we are not told who owns the machine. Is the machine owned by Podolsky, or machine is owned by Skeleto? So here our assumption is that this machine is owned by Podolsky, which is the outside supplier. All right, but before then, so in this case, the supplying cost is for 1,000 units at 100 naira for the next 5 years. So when you multiply 1,000 units by 100 naira, that will give you 100,000. So this 100,000 is for the next 5 years. Year 1, 100,000. Year 2, 100,000 till you get to year 3. Sorry, till you get to year 5, it's the same 100,000. So it is constant because you have been given cost of capital. Therefore, it is important that you indicate the years that those cash flows relate to, so that you'll be able to know how to discount your cash flows. The next one is machine disposal. Disposal value is a saving to an organization. Disposal value will represent a saving to an organization. So we are told that the machine will be disposed of today at 30,000 naira. Today means year 0. All right. Then the next one, you are told that product and process engineering cost. According to the question, you are told that if part 2011 is outsourced, product and process engineering cost of 8,000 naira will be incurred for next year only. So that is a relevant cost. So that's why you are seeing the 8,000 here. All right. Then storage space. Also, there is a saving under the storage space. Okay. According to the question in note 4, you are told that the company could then use the space for storage purposes and save 2,000 naira currently paid for outside storage. So for the next 5 years, the company will save that 2,000 naira. And that's why you are seeing savings of per year. So it's 2,000. So these are all the relevant cash flows. Of course, because this is a saving, so you put it in brackets. Again, this is also a saving, you put it in brackets, because a saving will reduce the cost to be incurred. Then what are the cash flows you need to consider under internal production? If Skeleto wants to produce part 2011 internally, what are those cash flows? That one is very straightforward because it's already given to in the question, in the table. Direct material is relevant, you take it. Direct production labor is also relevant, you take it. Variable production overhead is relevant, you take it. Depreciation is not a cash flow, you ignore it. We are told that product and process engineering must be incurred in order to ensure smooth production run. Then rent, we are told that this rent is an apportionment. So an apportionment is irrelevant cost, you ignore it. General overhead is irrelevant, you ignore. So the only relevant cost is direct material, direct production labor, variable production overhead, as well as the product and process engineering cost. Okay. So the next thing we need, now that we have brought out all the variables that we need, the next thing we need to do is to calculate present value for each options. What is the present value of outsourcing part 2011? So you bring out all the variables. The supplying cost for part 2011 is 100,000 naira as indicated above. So you need to calculate annuity factor because this 100,000 naira is constant from year 1 to year 5. Therefore, you need to calculate annuity factor from year 1 to 5 at 12% cost of capital, and we got 3.605. Let me check if I have the annuity factor formula down there. If not, I will give it to you. Okay, let me see. So the annuity factor is not here. So let me just show you how to calculate annuity factor. So generally annuity factor will be computed when you have constant cash inflow. So annuity factor, denoted as AF, is calculated as 1 minus 1 plus R raised to power minus N, all divided by R. So in this case, 1 minus cost of capital is R is cost of capital of 12%, N is the useful life. Therefore, I would then say 1.12 raised to power minus 5, because the period of this contract is 5 years for supplying cost, then divided by 0.12. So when you do your calculator, okay, when you use your calculator, you start from the parenthesis 1.12, then raised to power 5 minus equal minus 1 equal divided by 0.12 equal. That's how we got the 3.605. This is 3.605. That's the cost of capital. That's the annuity factor of year 1 to 5. That's how this number is gotten. Okay. So when you multiply the cash flow with the discount factor, we get the present value for supplying cost. The next item from the outsourcing is machine disposal of 30,000 naira saving. So we have a saving of 30,000. That's a saving here. Then, of course, because this machine disposal we are calling year 0, because the examiner said today. Today means year 0. So discount factor for year 0 is 1. 1 multiplied by 30,000 will give it 30,000. Then the next one will then be process and engineering cost. Okay, under outsourcing, we have process and engineering cost, which is 8,000 naira. This 8,000 naira, we are told, according to the question, will occur in year 1 only. So what is the discount factor for year 1? So this is the 8,000. Discount factor for year 1, that is 1.12. Okay, discount factor is calculated as 1.12 raised to power 1 minus equal. That's 0.893. That's how we got that. Multiply with 8,000 will give you 7,144. Then finally, under outsourcing, the last one is saving of 2,000. Okay, this saving of 2,000 is per year, because it will be for the storage space, it will be for the period of the contract. So 2,000 multiplied by 3.605, that will give you 7,210. So when you add everything together, the total present value from outsourcing per 2011 is 330, then 434. Okay, 330, 434. So the next thing you need to do is to calculate present value for internal production. If the company wants to produce per 2011 internally, what are the costs to be incurred? What is the present value? Of course, because all those cash flows will be for the period of the contract. The direct material of 44,000, the direct production labor of 22,000, the variable production overhead of 14,000, the product and process engineering of 8,000 is per year. So from year 1 to year 5, for the next 5 years, therefore you need to calculate annuity factor. So annuity factor for year 1 to 5 is what you have there. Multiply that with cash flow. You get the present value for each year. Okay, add up the present value. We have 317,240 for internal production of part 2011. If I don't want to follow this route, instead of going through all of this is too big. Again, it is better for you to even follow this, because shortcut at times can lead you to trouble. So all I need to do is to just add up, all right, all the relevant cash flow that I need for internal production. I can add up everything. Since they were affected with the same annuity factor, with the same discount factor, why should I be worried? I can do 88. When you add up everything together, that's 88,000. So I will just discount the 88,000 by 3.605. I will still get the same answer. Okay, so what I'm trying to say in essence is that instead of going through all of this, you can also do it this way. All right, you can also do it this way and you get the same answer. So the next thing I need to do now Now that I've discounted the future cash flow arising from outsourcing part 2011 and then present value from internal production, the next thing I need to do is to find savings, is to determine savings or deficit from making part 2011 by comparing the supplier's quotation, that is the cost of outsourcing part 2011, with the present value of internal production. Okay, so this is the present value we calculated for outsourcing part 2011. This is the present value of internal production of part 2011. The difference is 13,124, meaning that the internal production is lower than the supplier's quotation. In this case, our advice should be that Skeletal Limited should produce part 2011 internally in order to save 13,194. 10 marks, you pocket it. You cannot earn this 10 marks if you stop at this. If you stop at this, your decision, okay, if you stop at this decision that Skeletal Limited should produce part 2011 internally in order to save 13,194 naira, if you stop there, you will not earn the entire 10 marks because there are some costs in the question. You ignore them. Why did you ignore them? So you need to state your assumption. All right. Therefore, I can say the calculation above is based on the following assumption. Number one, machine. It is assumed that the machine is owned by Podolsky Limited. Podolsky is the external supplier. Okay, so it's owned by Podolsky Limited. However, the original cost of the machine of 120,000 naira is a sunk cost and therefore is ignored. That 120,000 naira of the cost of the machine is the original cost. So of course, it's a past cost, it's a sunk cost, therefore should be ignored. This 120,000 naira that was purchased last year, that was purchased in 2011. Sorry, that was purchased. The machine was acquired on 1st January last year. Okay, that was purchased last year at 120,000 naira. It's a past cost. Remember, relevant costs must relate to the future. So that's why we ignore the 120,000 naira. It is not relevant. So you need to state that assumption. Number two, depreciation. Depreciation is a non-cash item. That is, it does not involve movement of cash. Therefore, it is not relevant to the calculation. Number three, we talk about the rents. In the question, the examiner told you that the rent is apportioned. Okay, let's go back to the question where examiner mentioned rent. Rent cost of 8,000 naira are apportioned. Any apportionment is irrelevant cost. Any apportionment is not relevant, so you ignore it. So, and that's what I stated here, that the cost of the rent of 8,000 naira is an apportionment and not relevant. Therefore, ignore in this calculation. Then number four, we talk about the general overheads. The general fixed overhead is an apportionment and will be incurred irrespective of the decision taken on part 2011, whether the company produced part 2011 or outsourced part 2011. That general fixed overhead will surely be incurred. Therefore, the general fixed overhead is not relevant. So these are some of the assumptions made in the calculation. So until you do all of this, that's when you are going to earn the entire 10 marks in that A requirement. They will now move to number B. In the number B of the question, examiner is asking you, okay, number B of the question, examiner is asking you, what maximum price, okay, what maximum price should Podolsky Limited quote on the 1,000 units to make Skeletal Limited indifferent between outsourcing and internal production? What is that? When you talk about indifference means you are neutral, in between. What price should the supplier quote that would make the company, that would make Skeletal Limited to be different, whether to purchase from outside supplier or to make part 2011 internally. So what that means is that you want to break even. So in this case, to answer this requirement number two, you are expected to determine the maximum price. What you are supposed to do is to calculate sensitivity margins using sensitivity analysis. When we get to risk and uncertainty, we are going to discuss sensitivity analysis. The sensitivity analysis measures the tolerable extent to which a project NPV can accommodate any change in variable. So what this means is that if the supplying cost reduced by a specific percentage, can the project still be viable? Can we still be having the 13,194? You want to know what is the extent to which the supplying cost can change that will make Skeletal Limited to be different, that is to break even, whether they should outsource part 2011 or they produce part 2011 internally. There's a formula to get your sensitivity margin. So just divide the NP is the sensitivity margin depending on the variable that you want to calculate for. Sensitivity margin is calculated as the ratio of NPV to the present value of the variable. In this case, it will be the NPV of 13,194 divided by the present value of the supplying cost of 360,500. Let's see how I solve that. Okay, so